Hey, Steve Zonauto here with Remax Experts, Zonauto Associates. Happy Monday morning, and guess what? Inventory is down. We're at 17,607 units, down 1,000 since last week. And like I've been mentioning, list into this into winter season here and the Christmas season, just based on the inventory. So we haven't seen this less of inventory or this amount of inventory be so low since September of this year, when we were into the 17,000s, when we got into that climb into the 21,000s. So this is what we're trying to tell clients, friends: get to the market now. Potential clients, get to the market now. Like I said, we can block off time periods between Christmas so it doesn't affect your family time, but try to get your home on the market during this period because we've got a lot of eyeballs on the property, more than what we had, let's say, a month, 2 months ago. And then we're always preparing for that January dump of inventory. Clearly, we have listings in the pocket that are coming to market January. Our sellers don't want to go to market during the Christmas. We've tried long and hard to kind of explain to them why we should go, but they prefer January. So we have, let's say we have three or four listings coming on in January. We have two that we just listed this week because they've kind of taken our information. They're going to give it a shot. Why not roll the dice? We've been pretty clear and pretty precise on time in this market in the last 2 to 3 years, and so they gave us a shot. So what we're seeing now is the properties that we just listed. We had a slow start, and now we're starting to see a lot more showings. Like into the weekend, we had 3 or 4 showings per unit, so that looks very promising. And again, we sold our duplex. It took like 4 or 5 months to sell, and we sold it just prior to December. So it kind of tells you what's happening with the inventory and the buyers coming to market. There is some optimism with some investors that I'm talking with. I'm not sure if they know, or I'm just talking out loud, but they're thinking there's gonna be a rate cut coming up in 2024. I'm not sure, to be honest. I can't weigh on any of that. I think next year is gonna be a very tough year. But we know we're going into federal elections on both sides of the border, so ultimately I would imagine they would start trying to fuel the economy, kind of make it more robust going into an election year. But I'm not sure they can do that with the inflation, right? If they start cutting down rates, you're going to have a massive purchasing crew coming out and bringing inflation back up. So it's just a fine line right now. It's almost they need to like crash it and then restart it. And that goes for Florida too, even though we're holding up a lot stronger than let's say the most states in America and also Canada by far. It's still like there's pressure on selling clearly, or slower selling process clearly, because on the interest rates it's obviously affected a lot of people purchasing going forward, but still a much more solid market currently right now. Let's go into some article I was reading now this morning. I'll start with this one. This is TD slashing 3,100 employees. Like, so they're cutting the jobs. And I'm just curious, is this, yeah, they're cleaning house. Obviously, they're preparing the restructuring. They're becoming more lean and mean. But I would imagine a lot to do with this is secretly to do with AI that's coming out. I think a lot of these jobs are going to be AI driven. But also clearly, we know TD had issues. They had exposure out here in the States with Charles Schwab and so clearly the commercial sector out in the U.S. So they had some issues with liquidity and obviously at risk. So that could be an issue too. Obviously they're leaning up, putting more money away in their pocket. But again, I would imagine a lot of this has got to do with AI too, going forward. And then there was another article, and this is the optimism, because it's going back and forth between investors and banks, where the investors are saying that we could expect a price or an interest rate cut next year, and banks are talking about that they won't see any cuts, just based on, or actually Jerome Powell, the finance minister here in America, so they're talking about there won't be any cuts going forward, just based on inflation. So we'll see. I mean, this one here says Fed Chair Jerome Powell on Friday pushed back against expectation of cuts in the first half of 2024. Swaps market now see a more than 50% chance of reduction in March and are fully pricing in a cut in May. So they're expecting some sort of price cut going into next year, but we don't know. It's basically rolling the dice. You're seeing also the bond. They're selling the people are dumping the bond, and usually I read about this. When they're dumping the bond, they're basically preparing for a higher bond, like a higher interest rate. So basically what they're doing is they don't want to hold their money into a bond right now if they're going to give better rates, let's say in 3 to 6 months. So they'll sell everything out now. So buy low and sell high, basically the same idea. So they're selling out everything right now, and they're ready to buy in at a higher interest rate going forward. So that's what's happening here. It says even so the bond was sold off, and which brings up the yield, and it was up I think just 5 basis points, nothing crazy. But again, that's currently what's happening with the market. And we don't know. We'll see. We'll play it by ear, basically, and then go from there. I mean, we're obviously we're in the market here to build properties, right? That's the whole thing. It's just which direction is this? Hopefully now today looks like we're on a sign back on a lot. I think we can do the deal. We're probably just 2 to 3% away from like price wise to do a deal. I like the property. I think it's got a lot of improvement that was done to it. It's got a dock. It's got a seawall on a canal in the area that we're looking for. So it has the utility expansion program. So all the utilities are there. It's ideal. They were trying to sell these for 110, 120 just recently. We can probably pick it up for probably 30-40% less of what they're originally asking. So even now the market doesn't look, we don't know where is it going to affect here in the Florida too. But I think at that price there, that's a good lot to kind of hold on to just based on the improvements. Like a seawall is like 30 grand plus the dock. I don't know, maybe another 5-10K. So there's definitely some improvement there. So that I would imagine today we're going to pull the trigger on that and get it at least sold on contingencies just to make sure we can build what we want on there. But that's pretty much it. Have a great day, guys. If you have any questions, obviously list your property in December. Like I said, give us a call. We'll have a high level conversation with you, and we'll kind of run through the steps and how we would basically get the house in the market, not to affect your family life during the holiday season, and ultimately hopefully get you a sale and a closing like in January or like February, like 2-3 months down the road, which would be great for you and your family. Cash out, get ready to buy something else. Maybe you're trying to limit debt, or maybe move to another area, or maybe you need a larger house based on your family situation. Like, this is a good time. Don't shy away from this opportunity. List when no one else is listing. This is the point of making the most amount of money because of less inventory. Have a great day, guys. We'll talk.